It's UPBOptionMillionaires.com. Welcome to April. It's April 2nd, 2016. It's a Saturday, and here I am just a couple months removed of being up here with the VIX and doing a video talking about the looming rejection of that 30 level, which has been rejected previously over the last couple of years for the VIX. And sure enough, it not only got rejected, but folks, if this was Dikembe Mutombo, the opponent would be on the ground bleeding. That's how bad this market has rejected that 30 level. And on the flip side, we've had a furious rally, the likes we have not seen in quite some time. It was mirroring the move we saw last year after the flash crash in August, but has really broke out. And yesterday's action, it seemed like there were no sellers left in the market. They'd all waved their white flags, surrendered. And if you look, the action here brought the VIX down to lows that we have not seen prior to last August's, if that's even a word, August's move to the downside. Now putting the VIX at that 12 to 14 range that I was talking about up here that the market likes so much. And what that means is the continued shrug of any kind of downside possibility. As we saw on Friday, let's look at S&P 500 futures real quick. Again, we'll zoom in from a shorter term perspective in a minute. But again, the pattern that we saw off the double bottom. And look, we put in a lower low this year, which really faked you out. And I've dubbed this 2016 action the rope-a-dope. As the boxer gets up against the ropes, and we took a slugging all the first couple months of 2016, all the way to the middle of February, before coming to life in the 10th round and just knocking the heck out of the opponent that was formerly beating the crap out of us. If you look here, it's a shorter term pattern. You can see the move off the ropes yesterday. S&P 500 futures falling. We're down 0.5%. The jobs report. Here it is, folks. This is the market that's finally going to roll over after this massive move to the upside the last 8 weeks. And no, not today. The S&P 500 snapped back, a furious rally off the lows, not a grind to the upside. No, that only happened after the massive face rip rally off the lows yesterday. And then we stair-stepped our ways to close at session highs. A really remarkable move yesterday. Only 0.65% to the upside for S&P 500 futures, but for all intents and purposes, almost like a 2% move, all in the face of an eroding crude oil market. Crude oil closed the day down over 4%. So that crude S&P 500 correlation is completely gone out the window. Crude oil does not matter anymore, folks. We gotta mount some sort of rally or protest, because if you look, crude oil does not matter anymore. As crude oil starting to roll over, you could draw a trend line across, reject. We've closed this gap that we had to the upside, and now we're moving lower, folks. That 273 level of just 8 weeks ago is right there. And if you look, another market that's just not really loving things, how about the Japanese, who have been printing money hand over fist, devaluing their currency since November 2012? The Nikkei was down, I don't know, 600 points to the downside on Friday. Yeah, so in the face of a furious rally, you get this beautiful red candle here. Certainly just shrugging our shoulders in these markets, supposedly intertwined, the global economies, everything's intertwined, but yet Nikkei down 600 points, Dow Jones Industrial Average soars 200 points off its low. Yeah, you guessed it, folks. It is ass backwards world. Welcome to 2016, where negative is the new positive, and down markets are the new up markets. Everything is awesome. And let's switch back to the VIX here real quick. I just want to point out, from the highs that we saw at the start of February when the market was crumbling, the Great Depression was just around the corner. The VIX, from that point, has seen nary a green candle. Something like 28 of the last 35 trading sessions, the VIX has been beaten down. Beaten. I mean, there is a bully law for how bad this beatdown has been for VXX. Look at this. Red candles. If you were selling red candles the last couple of weeks, you were doing pretty good. So yeah, selling. The VIX has been a great scenario. If you look on Friday, yeah, the VXX, someone was just hand over fist dumping VIX call options like they were going out of style. I guess, if you knew the market was going to head higher and the VXX was going to head lower, you could sell those with nary a caution, with throwing caution to the wind. And if you look, the VIX closed at the lows, down 6%, down 28 of the last 35 trading sessions, only up twice. Here you go, folks. Look closely. There's a green little bar there. Those would be the up candles. We are up twice in the last 17 trading. And now let's go to Google. We get some individual names here. Google, I talked about the 700 level being support. It's worked its way off the lows. Now running up against trendline resistance. Google, something to keep an eye on here for downside. Remember back in 2015, loved that 550 level Well, guess what? We're seeing a lot of that 750 level for Google. So heading into earnings this quarter, keep an eye on 750. Remember, the 550 level was a launch point for Google. Is this going to be another launch point to the upside? Or we're going to come back down to 675 support. Facebook, I got into some puts late in the week this past week as the stock came up. Put in a possible double top here, at least in short term. And we did pull back on Thursday. Yesterday rallied with everything else, but if you look, support has worked out nicely. Dipped below 100 at the lows in February, but this trend line has worked as great support. We're going to come back and hit it again. You can see along the way, this trend has been hit numerous times, and we've really run away from it. And I would like to see Facebook come back and at least test it again, maybe up at the 105 level. So it's something to keep an eye on. Facebook may be running out of momentum here. Apple, I know everybody's on me because I thought the stock was going to trade lower in 2016. It did. Then it started to bounce. If you look, though, we're up against trendline resistance here at about the 110 level. And if you look, Apple closed at 109.99 like it was on sale. Wasn't going to close at 110, no. 109.99 looks that much cheaper, even though it's just a penny off the 110 level. You can see it's coming up. 110 is going to act as resistance here, as well as this trend line. So look for Apple to trade lower this coming week. Also, look at the bond market continuing to rally. Look at this. The stock market's rallying. Bonds are rallying. Gold is having one of its best starts to the year. Everything is up. Everything is awesome. It's 2016, folks. And look at TLT, the bond market. Maybe going to break out and bust out of this double top pattern here. Is this some sort of, if you look, possible a cup and handle formation? That cup and handle formation would resolve with new record highs for TLT, the 20-year bond. Treasury ETF, couple more charts here to look at. Gold. As I pointed out, gold off to a great start. You can see it's starting to roll back here to long-term trend line resistance that had broken through earlier this year. Still looks rather bullish to me. Gold. Also, the US dollar index has been pulling back, helping to make gold a great place to put your money. If you look yesterday, though, what a reversal we had off the lows, but it was down almost 2% yesterday before rallying. You could look similar to what we saw with the stock market, pulling back, although not the face rip rally. This is more of what we'd seen with the market, just a nice grind to the upside. Gold, that's what it did off its lows yesterday, but was still down pretty nicely. Look at energy. This is one that I think, despite whatever the market's going to do, I think is going to really start to roll over here in the next couple weeks. You can see, again, downtrend in it, and this is something I was bringing up with the overall market. We had a great bull market off the lows for energy, but the top was in, and we started to roll over. Direction has changed. Trend is also pointing downward. And you look, we came up here against long-term trend line resistance. We're going to start to roll over again. And again, that 50 level is going to be really important if it can hold it, maybe a double bottom. But I think if it breaks through, which is a good scenario, likely scenario, that we're going to see a move into the 40s for XLE. Got down to 49.92, I believe, is the low for XLE. So finally, we'll end with the S&P 500 ETF. The spiders here is a 10-year monthly chart. You can see the action bringing us up to long-term trendline resistance. You want to head out into 2016. I do think we're going to come back to the lows that we saw earlier this year, and I think we're going to break them. We've had this really sharp relief rally. You look at the action really since the lows of March 2009. Look at the candles. Nice, smooth action to the upside. Well, what's happened here recently? Look at this. We have these wild swings. It's this consolidation. I think it's more uncertainty, and I think ultimately prices are going to head down in 2016. It's going to be a great move to the downside. The one thing you look at, though, recently, even the last couple trading days, as the market's moved up the highs it hasn't seen in 2016, bearishness is still pretty big out there, and it's not a lot of people bullish on the market. I think that's another reason why we continue to head to the upside, because the market likes to do the exact opposite of what its participants expect it to do. So as we come up here, I don't see the market heading over this long-term trend line resistance here, and I think we're going to head back down just above 180 on the SPY before finally breaking down. It's going to be a good move to the downside. All right, UPBOptionMillionaires.com. Hope you have a great weekend. I'll see you in the chat room at OptionMillionaires.com Monday morning.